Welcome back to another TradeOut technical analysis tutorial. This is Introduction to Range Trading Volume 2. We're going to go over the fixed range tool. That is probably one of the most important tools that I use in my everyday trading. I use it quite often, so this is definitely a good one to have for your arsenal, and it is very powerful for range trading. Let's get to the video. So here is the fixed range tool. As far as the settings go, again, it's a really good tool to have just in your tool belt. And it gives you a great idea of where the volume's actually coming in within the range that you select. So the fixed range tool, you manually are selecting the levels versus something like a VPVR that, it's going to give you the visual profile or the visual range. Whatever's on your screen, it's going to automatically adjust. The fixed range tool, it gives you precision, which is why I like it. But here's the default settings. As you can see, there's the only real difference is the row size. And honestly, it's not that critical. I use a row size. So the default settings is 24 for the row size. Value area volume 70% or 70, as you see here. And then for my settings, and again, TA settings is a joke because of the whole trading bot thing. Please don't call it TA settings. But the row size I use is 144, and you'll see what that does difference-wise as far as the tool goes. But also another reason why I use 144 is it's a Fibonacci number. So always like to use Fibonacci numbers when I can. And then the value area volume is also set as 70. You will see some people use 68, and that's acceptable. I mean, 68 is, it's close. So I don't think there's really that big of a difference. I just keep it on default settings for there, but there are certain applications where I think 68 is fine. But anyway, those are the settings. So I'm going to show you the settings very briefly. That way you can see why I use them. So you come over to your fixed, so it's actually preloaded here. But if you click on this tab, go to the bottom, fixed range and volume profile, that's what we're looking for. And then you're going to pick a starting point, which is essentially going to be like the starting point of the range or whatever you're looking to measure as far as the volume goes. So I'm going to start here, and you can see how the tool is kind of dragging as you're moving the cursor, it will adjust. And I'm going to select the entire rest of the chart. So obviously you could stop here, and then it's going to give you your volume profile for, the area that we selected, but I want to include all of the price actions since that point. And I'll probably be going over this later in the video. But if you double click the settings, so there's a couple of things. So here on style, the style tab, these are two things that I don't use, but you're welcome to check it out. It's the developing point of control. So what's interesting about this is as price continues, right, as we have new price action, the developing point of control will kind of show you where the point of control is kind of gravitating towards, if that makes sense, or like where a new point of control could end up being. I don't use that because, again, as you can kind of see, it's a bit messy, and it's not, honestly, I don't really think it's that important, but you can try it out. Same thing here, developing value areas. So you can see your value area high, your value area low. Obviously, you can change the color of your lines, that type of stuff. But it's, again, same thing, kind of shows you what's developing. I don't use it, but if you think it's interesting, you could check it out for yourself. So the inputs, the only thing that you're going to change if you're going to be using either the standard settings or my settings that I like to use is the row size. So again, this is what 144 looks like, and it just means that there's 144 rows here. And what I like about that is that it's a bit more precise. So when you're measuring large sections of price, it's much easier to see this. And again, I think it's more accurate. And your point of control is going to be more accurate, in my opinion. So you'll see the second that I change this to 24, which is the default, so you'll see what will happen to the bars. So change that to 24, click OK, and there you go. So you can see you still have the same value areas. Your point of control is didn't move, I believe, or maybe it shifted slightly. But that's the difference. So it just comes down to preference. It comes down to, you know, again, it just really comes down to preference as far as what you think works best for you in this particular, you know, if I'm pulling this exact pull, I definitely would want the 144. It gives me a bit more precision as far as exactly where the point of control is. And you can see, you know, there's basically, if you went back to that, the default settings, it's just grouping sections of these bars, right? So again, it's not going to be as precise, but it does a fine enough job. And I've used the default settings for a long time. I use both. I really tend to prefer this one, but if I'm trading small ranges, sometimes it's just easier to use. It's easier to use the default settings just because there's less bars, right? So if you're trading like a really small range, you don't necessarily need 144 bars, right? So anyway, that's how you change a setting, and that's the difference between the two. All right, so the fixed range tool, again, we're going to start to discuss what it's actually measuring. Okay, so value areas. What a value area is it's the range of price levels within a percentage of all volume traded during that selected time period. So the percentage is 70%. That's what that setting is from the previous slide, right? So we're measuring the value area. It will represent 70% of that, of the volume that's there. So again, some people use 68. I use 70. It's fine. I don't think it's not really like that big of a difference, but I just tend to stick with the default setting for that. So again, value area, that's what that is. A profile low or profile high, it's very simple. It is literally the lowest or the highest price that was reached during the selected time period that you select. So again, when you're pulling your fixed range, whatever is the lowest price and the highest price, that's your profile low or high. It's very simple. The value area low. So that is the lowest price level within the overall value area. So, or the highlighted section, which we'll see in the next slide. We're going to actually go over that. Point of control, incredibly important. We're going to cover that as well in another slide, but it is probably the most important. It's probably the most important level that is shown for the fixed range pool. Like the point of control that's the real level that I'm looking for. It's very important. So the point of control is the price level with the highest traded volume for the selected time period. So again, whatever range that you're measuring, wherever that red line that goes across is the point of control, that is where the most trading volume took place for that fixed range. And then last, the value area high, which is just the opposite of value area low. But the value area high is the highest price level within the overall value area or the highlighted section. All right, so here's a visual example of everything you just learned in the previous slide. So we're going to go over those things. Starting with, I guess I kind of worked top to bottom, but again, your profile high right here is literally the highest point. So if you look at this volume profile, the shape right here, the absolute high is your profile high. You can see where that comes in. Your profile low is the absolute lowest point that was traded within the range that you select. So those are your profile high, profile low. The value area, which you'll hear me refer to that many, many, many times going forward, is simply the highlighted section of your volume profile here. So this is the 70% of the volume that we're measuring here. So this is how the value area is calculated. So whatever is highlighted, you'll see that the part that's not highlighted, it's not that we're not interested in what's happening there, it's just not part of the value area. So that's why this line that goes across a VAH, that stands for value area high. That's essentially what we're measuring. And you can see pretty decent respect. So that's your value area high. Your point of control, again, is this red line that goes straight across. That's where the most business was done, right? The most amount of transactions, like the highest amount of transactions took place here at the point of control within this overall fixed range. So it's a very important level, which if you're looking at it just right here, you can see once price came down and lost the point of control, it's essentially acting as resistance, and it's having a very difficult time getting back above that. So point of control, very, very important. And then lastly, your value area low, which again is the bottom of your volume profile that's highlighted. So again, this is representing your value area low. And then the line goes straight across. Now, these lines aren't going to be here, by the way. So the only thing that you're going to see is your volume profile, and you're going to see where your point of control is coming in. All of these lines that I've added over here are all manually put in there. So when you go to populate, or if you're on TradingView and you're trying to kind of copy my chart, you're going to have to manually put in your value area high, point of control, value area low. So a few important things to remember with the point of control. It literally has its own slide. So that ought to tell you that it's a very important level for you to pay attention to. So again, point of control. This is the level where most of the volume took place within a given range. So we discussed that already. But it becomes a really important support resistance level upon retesting it, especially the first test. So, or the first retest, I should say. I can't understate how important that level is. Untapped or naked point of control. So you might have heard me say naked point of controls before. They're incredibly powerful. And if you've been following me for any length of time, you'll know that naked point of controls is something that I discuss quite often. And they're usually levels that you'll see on my charts, but they're simply untapped point of controls. So price within a given session essentially creates a point of control, and then when the next session starts, if the price opens below or above where that point of control is and moves away from it, let's just say, then you have that naked point of control that's sitting there that's untapped. So typically what happens majority of the time is you'll have your session close, so whether it's be daily close, for example, and then you'll have a new daily open, and price has a relative tendency to come back to that point of control. It just does. And you don't often have naked point of controls. It's not like they happen every single day. But that's essentially what you're looking for. And when you do have naked point of controls that are far away from current price, eventually when price does come back down to retest those levels or come up to retest those levels, you usually do see a pretty nice reaction off of those. So that's, again, we'll get more into that later on down the road. But that's another, again, it has to do with point of control. First touch of the range point of control, which in the previous slide you saw where that point of control is usually the strongest, just like support and resistance levels. So it's treated very much the same way as a support and resistance level. That's just something to highlight. Which, by the way, you go back to the previous slide and you can see it's very strong resistance at the moment. So trading the middle of the range, which I touched on this in video 1, it's the same thing. Trading in the middle of the range or around your point of control is usually a very poor place to be trading unless there is a major confluence for taking a position there. And by trading, that's what I mean, is basically establishing a new position at the point of control. It's usually not a very good idea to do that. But if there is confluence there, again, price has been away from the point of control for a while, and it comes in and maybe it aligns with a golden pocket or aligns it with something else, right? Then that's, you're assuming that the first test of that point of control is likely going to get a bounce or a rejection off of, then, that could end up being a really good trade. But for the most part, when it comes to range trading, taking new positions around the point of control is not really that great of an idea. So tips on trading ranges, you're going to recognize this from video 1, and it's very much the same way. Except the difference is instead of the range high or the range low, we're going to be using value areas. We're going to be discussing the value areas themselves. So this is, again, if you've been following me for any length of time, you'll see this on my chart a lot. So hopefully after this video, it'll make a bit more sense. And obviously as we get into, more videos within this learning module, I think you'll definitely be able to grasp that. But tips on trading ranges, value area low. When price approaches the value area low of a range, especially an established range, so not necessarily a brand new range, like this is for, ranges that are well established, you're typically looking for long positions. So if you're trading the range and it comes down to the value area low, that's typically a good area where you're looking for long positions. Or If you happen to be in a short position from higher up in the range, that's usually a take profit. If not, your second take profit, because again, it depends if you shorted the value area high, you shorted the higher the range, then that would definitely be on your radar, in my opinion, to be looking to take some profit off the table. So again, you're either looking to establish a new long position there, or you're definitely taking profit on your shorts, maybe even flipping long. The point of control, that's almost for myself when I'm trading a range, the point of control is almost always a take profit one. There's very rare instances where it's not. I can't really think of many instances where I wouldn't do that, but the majority of the time, if I'm taking a position, let's say at a long value area low, the range point of control, I am highly likely taking my first profit off of that level, because I expect that to be pretty big resistance, right? And then the value area high. The value area high of the range is where I'm typically looking for short positions, because if you're approaching value area high of the range and you're expecting price to continue trading in that range, that's where I would typically look for short positions when I'm range trading. Or it's usually the second take profit on a long position. So if I long value area low, take profit one at point of control, take profit two for me very often would be value area high of the range, or a slight front run of the value area high, meaning like if value area high is at, let's just say 65,000, I might take my profit as 64,980, something like that, right? Just a slight front run to that level. And also, one thing is these levels are not, they're not exact. Like you have to give these a little bit of leeway. I mean, you see the difference between using the default settings and using the settings that I use, right? Like you see how much those levels could shift. When it comes to your value areas, yes, like when I plot them on a chart, they look definitive as in the level, right? And it has a price attached to it. Like it's a definitive level. But really, you have to think of these as little zones. So they're not always particular, like exact lines, like exact levels. That you have to give these levels a bit of leeway. And then lastly, probably the most important thing that I've said is confluence is very important for these levels. So are you looking to trade these levels blindly, essentially? I mean, they're, especially in mature ranges, like these levels are relatively well defined, but in order to add, in order to give yourself a better trading edge, I really, really recommend making sure that you have at least one other form of confluence to give you, like, to add strength at that level is going to hold, right? Or it's going to reject off of there, for example. Like you want to have at least another form of confluence that tells you that that is a good trade to take. So I'm going to go over a few live examples. There's going to be so many examples in this module, like in later videos, that I don't want to bore you, I don't want to be overly boring. But this one actually is really interesting. And what we're looking at here and why I'm interested in taking a fixed range pull of this exact price action that I did is this is the fixed range of essentially 2021, this year. And we're in November. So, I mean, we're measuring a pretty significant amount of price action. And by the way, so I'm going to delete this so you can see this a little bit better. Again, going back to identifying ranges, right? So you have an impulsive move. You can see that's very clearly impulsive, right? Kind of have sideways, impulse, sideways, correction, sideways, impulse. Bit of a, you get a nice range that gets put in here. But ultimately, big impulsive move once your 20K, 3-year all-time high gets broken to the upside. Let me zoom in so you can see this a little bit better. But again, really big impulsive move to the upside. Which actually, the funny part about this is it's this move here to about 35K. And then this rejection, that to me is what starts this range. So yes, you do get another impulsive move to the upside. And you're not wrong for starting your range here. But as you can see, price comes down right into this lows. So you have a daily level that's sitting right here, right into this low. And then you can see you get oscillation back to this area. So I would start my fixed range pull here as opposed to up here at the top. that's why I'm starting it that way. So what I'm going to do again, take my fixed range, start it here, pull it over. And this again is the fixed range of this year. Basically, you're missing like a day or so, something like that. Doesn't really matter that much. And so I guess I could, one more thing. So going back to video 1, I can tell you with very good certainty where is the bottom of this overall massive range that I could be putting in, right? Is this a range? In my opinion, yes, it is. So you have, again, your range low up to what was all-time high, and you come all the way back down to your range low. Literally all the way back down to your range low. It's tested, you know, multiple times before, again, another rotation to what could be the top side of the range. Yes, we made a new all-time high, but especially looking at kind of how price is here locally, you know, if we do see a bit of downside, we very well could continue to trade this range. Now, how likely do I think that is? I don't think it's like super likely, but that's why I'm kind of measuring this out the way that I am, if that makes sense. So, you know, if I was to go back to video 1, I would say that, you know, the bottom of the range is going to come in around here. So hopefully that makes sense. I mean, you could actually go back to even maybe this candle and say like that's pretty good bottom of your range. And then you can see it's tested many times, right? And then the, you know, up here, it's basically where price is. It's pretty close. I'd probably put that at like right around where we're at, but kind of be about your range high. And you can see you get a little deviation, but ultimately majority of the price is within these two levels. And then even currently, as we break above this, we're using it as support at the moment. So it's still holding the top of the range for the most part. And then, you know, if it does come back in, just saying. And then we could even do this if you really want to. Now, this isn't really the point of this video, so I don't want to spend a whole lot of time on it, but your midpoint of this range would be here at about 44,000, something like that. You see, it's pretty well respected. It's very well respected. We can change this color to be red. So, oh, whoops. It's the style. Change this to be red. Again, here's the midpoint of your range. And incredible respect, right? It's respected here very nicely. This literally makes your low before you go back to the top of the range. So now we're getting a little off topic, but this is actually a good example. It's coming back up to the top of the range. Get your deviation here. Price gets acceptance back within the range. Rejection off of your range high. All the way back down to your range low. Okay? Spend time consolidating. Multi-month consolidation. I think this was like 80-something days. And multiple tests of your range low. Go back to the midpoint of the range. Reclaim the midpoint of your range. Again, finding support, 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 support. Check this out. Even you come, you know, using as support, loses it, rejection, rejection, reclaim, back to top of the range. And we actually are broke, like we broke up through the top side of the range, and we've been consolidating. You know, we did make a new all-time high, but again, we're kind of forming another range up here. Well, not we're kind of, we are. Like this is its own range up here. But price is literally sitting right now at range high. If we start to get acceptance back into this range, then yeah, we'll cross that bridge when we get there. So kind of a cool tie-in to the first video, right? So that's kind of like how I'd be looking at this. Now to back to video 2. So hopefully that was, again, that was just a nice example. So impulse to move up, I already spoke about why I selected the range where I did. And then you're literally going to pull it all the way across. So what are we looking at? So here's your value areas. Now I always start off with value area high, which sometimes you'll see these on my chart. They're like big range value area high or something, because like really sometimes I have range, like sub ranges within an overall larger range. So I will mark them differently, but we'll just keep it simple. And then we have your point of control, which by the way, the level for those of you in VIP, 48K. Oh, that's strange. It's the level I've been talking about. Now you know why. And then quite simply your value area low. So of this big giant potential range that we see here, getting acceptance back below value area high. So this is where things change a little bit, right? So you have your range low and your range high, which were represented before I deleted them, right? That's the high of your range. And then this was the low of your range, approximately. Now, your value areas are represented here in the highlighted region. So your value area high, there's, just below 55K, point of control, 48K, very important level. And then your value area low all the way down basically at 31K. All right. You have up here, which is your profile high, profile low, all the way at the bottom. Those aren't really like that important. I mean, it's obvious. It's obvious wherever the highest point is, it's not, it's not usually that big of information, like that important. But this is how you pull a fixed range of, and again, I highlighted the reason why I'm interested in this price action. That's how you use the tool. And the most important things to highlight when using this tool again are these three levels. And they are support resistance levels as well, like I had spoke about. So value area high of the yearly range is coming in at 54,767. Again, for those of you in VIP, you're going to know that that level is very interesting right now. So I'm not going to get into that because it's not related to this video, but you'll know why that level is very important. And you also have very nice support, or you have very nice confluence in there. If that level is broken to the downside and you get acceptance, right? So you see something like this. Say price comes down, maybe you get a bounce, and then this. So it's the acceptance below value area high. When you're trading ranges and you get acceptance below your value area high, you're looking to the point of control. So it's very possible, and this is, again, is why 48K is such an important level. And this is really something the bulls need to see, in my opinion. They need to see this level held, because if it's lost, when you're trading ranges again, so let's say that it does something like this, and they get acceptance here, you're looking for the bottom of the range. So now you're going to have support. You're going to have support below. There's going to be lots of different support levels throughout this, but if you're looking at this purely from a range trading perspective, not looking at anything else, that's how you would look to trade this. So again, acceptance below value area high. And what does acceptance mean? It just means price coming below and actually holding. So a wick doesn't count. See, this is not acceptance. Where you get wicks through, it's totally fine to have wicks through. But as long as you're trading below this, you're looking for that next level. And it's the same thing down here. So like, let's say price was down here and it reclaims your value area low. Your next target that you're looking for, like check this out, value area low is being held up quite nicely. You lose it, reclaim, up to your point of control. Target 1, target 2. Whether or not you take all of your, whether or not you close your entire trade, that's up to you, however you would look to trade that. But that's, again, level to level. And, again, value area high, if it's lost, point of control, kind of the next area that I would be looking for if I'm trading this range, which I definitely will be. So that is a very nice example, in my opinion, about how you can use the fixed range tool to give you that important data. And again, you definitely want confluence with these levels. So you want to see other things that are lining up here, whether it's other support resistance levels, maybe it's another indicator that you use that's signaling to you that, this is likely to be pretty strong support. Then, this being the value area high of this yearly range that we're in is absolutely valid. Like, this is very powerful levels here, in my opinion. So let's look for maybe one more example. We could probably just use the same Bitcoin chart, honestly. I guess we will. So let me just delete all this, but this is, again, very important. So there's a local range here. I'm going to go down to a little bit lower time frame. Maybe this is a bit easier to see. So impulsive move up, and then we start flattening out for our range, our consolidation, right? fixed range tool. Where am I going to start my range? Personally, my range is going to start here. So whether or not you start it here at the end of the impulse before the big decline, this is also a place that you can start. I'm just starting it here because again, this is, to me, is, and by the way, the reason why I'm starting here is because I actually recognize this range very early on. So basically, once we started to come up, we made this, and it's kind of, you'll see a lot of times you'll see like a wick like this get put in, and then we just kind of go in the sideways range. I was trading this range as it was forming. So like I already, like, this is kind of why I picked this starting point anyway. But yeah, I recognize that very early on. So anyway, you get your fixed range tool. And again, I'm kind of going to start around here and go all the way across because this is kind of like our current range. And you recognize that? Yeah, that's from the picture in one of the previous slides. So again, same thing. Where's my value area high? It's the top of the highlighted part here. And you know, you can kind of see how I have my template set up. I recommend setting your templates up. It's really, really helpful. It makes things a lot faster that we don't have to relabel everything. Come down to here, which is red line that goes across at your point of control, or again, where most of the business has been done within this range. As you can see right now, if you zoom in, point of control, very big resistance right now. So price comes down to it, you get an initial reaction off of it. So look at this. Look at the speed at which this is moving down. Where does it stop? Point of control. Before losing your point of control, and yeah, you get some wicks through it, but you don't have acceptance back above it, at least on this time frame, right? And just very strong resistance at the moment, price moves lower. Anyway, back to this. And your value area low, which is the bottom part of the highlighted value area. So that is how you derive your value areas for this particular range that we're in now. And it's the same thing, you know, you just look to trade this from the low to the high. And, you know, we're currently below the range. So what would I be looking for next in this instance? So again, kind of something like this potentially. Kind of something like this. Maybe it's another bit of deviation here. And then, you know, once you start to reclaim this value area low, specifically the point of control would be way better. In my opinion, that would be a bit more definitive for me. If price is able to reclaim this point of control, then I would be looking back up to around this value area high. So again, there's going to be resistances, same as the previous example. There's going to be resistances along the way up. But if you're looking at this strictly from a range trading perspective, if you do get acceptance back into the range value area and you're, you know, value area low, then point of control, get acceptance back above point of control, you're looking for that another rotation to the value area high, which if you look, there's been, you know, so we started the range here, rotation to the high, low, high, low, high, of course, all the way back down to the low and out of the range. So again, you have these bits of deviation here, but just showing you that if you get acceptance, so if price kind of does this thing, like you would be looking for another rotation, and it wouldn't be anything out of the ordinary because price has done this numerous times already. So again, that's a few more examples for you. You know, the point of this video was really to show you how to use the fixed range tool. And again, the big part about it is playing around, and like we're going to get into this later on in the module. Like there's going to be plenty more examples. So again, I just wanted to show you the settings that I use for fixed range, kind of give you an idea on where you can use, start your ranges from. And then obviously like how powerful of a tool that is to give you those levels. And it can be used on any scale, right? Like any time frame. So you could use your fixed range tool. I mean, we could go on like a 5 minute, right? Like you can literally take your fixed range and be like, oh, I want to measure this. Like kind of see what's going on here. And it will pull your value areas, your point of control. It will, you know, it'll give you that information. So what's really neat about that, again, I use it in my trading every single day. And, you know, again, this video was just to kind of give you that introduction into how to use it, the settings, why I use the settings the reasons that I use the settings that I do. And then, again, give you a bit of insight to how you can use it. But later on in the module, we're going to go over some very specific key points that I like to use the fixed range tool for, because, there's definitely more uses than just pulling, these types of, sideways ranges, for example. Like there's a lot of other use cases where I think they give you very valuable information. So I'm going to do one more chart here, and this is SNX USDT. And I'm going to do, give you a little bit of bonus footage here. And there was a member who actually DM'd me asking me how I got my macro value areas. So I wanted to show you how I do that really fast, because again, these are really important levels as well. Obviously, they're macro levels, so they're very high time frame levels. So just keep that in mind. Again, they don't always get perfect respect, but what they signify is just really important levels as far as your the high time frames go in your chart. So you get your fixed range tool, and you're going to select the entire chart. So start at the very, very beginning of the overall chart, all the way to current price, and this would be your macro value areas, and as well as your point of control. Same thing. Just thing kind of in the way a little bit. So this is why I have these macro templates. So macro value area high, macro point of control, and your macro value area low. So I'll talk to you briefly about these levels. The funny thing is, okay, you can delete this. You don't need this anymore. You can see that these levels are relatively well respected. So especially your macro value area high, we've had kind of a lot of interplay between these levels recently. But just looking at this again, so price comes up, makes its all-time high. Where does it come back and find support? Literally the macro value area high. And off of that, let me find my, I just had this now. So off of that, you got a 76% bounce off of your macro value area high retest here in 10 days. So like insane, like incredible bounce off of that level. And then you come back down, get another retest, actually take this low, but yet another big bounce to the upside. So coming in off your macro value area high. What happens after your macro value area high is lost? Well, you can see again, your point of control comes into play. So this is, it's kind of the same. It's basically the same thing. Lose your macro value area high, you're looking for point of control. Where is your next kind of initial area where you find support? Point of control. Zoom in. So again, very close to your point of control here for a bounce. Comes back down, actually tests through your point of control a bit, but you're finding support here, right around where your point of control is. And look where it rejected off of, macro value area high. So you see, come down to your point of control, come up to your macro value area high, big rejection, takes you all the way down. And now price is just basically oscillating within this range, which we can actually break this down even more here. But you look at where your macro value area high is, that is immensely important resistance at the moment, right? So price comes back up, rejected, makes a few formal tests of this level, big rejection, back down to your point of control, gets back above here, gives you a bit of a deviation, sends price all the way back down to macro value, or I'm sorry, your point of control. Pretty crazy. So yeah, so for that person that DM me, that is how I come up with the macro value areas for my charts. You're literally pulling the entire chart, price action history, the entire thing up to current day, and then that's how you're going to identify these levels. And so, we can probably get more into this in later tutorials within this module, but very simply, again, these are very high time frame levels that you can see they don't get perfect respect a lot of times. Like they don't, this one actually does pretty good. But these are levels that are of importance on a much higher time frame, higher time frame view. So locally here, we'll do one more quick kind of range example here. big impulsive move down. So it's opposite of a lot of charts that we've seen. Typically the impulses are going to the upside and then we're ranging, right? In this case, well, you do have this impulse, big, massive impulsive move to the upside. And this is a massive range as well. So you do have that, followed by impulsive move to the downside. And now this sideways consolidation. So we can pull a fixed range of this price action as well. And I would start again, impulsive move down, creates your low, and then starts the consolidation. So this is where I'm going to start. And funny enough, your macro point of control is also the point of control of this range. Not too surprising there. Zoom in a little bit. This would be your value area high of the range and your value area low of the range. So locally, you can see there's kind of a bit of chop through here. Again, point of control. This is, you know, there's a lot of volume being put in right around this level. So it's no surprise that the point of control of this range is also the macro point of control, right? There's just been a lot of trading activity happening at this level. But even locally here, the value area low of this sideways range that's being put in here is amazing support, right? Look at this. It comes back down, perfect test, big bounce. And it's really holding up very nicely as support, at least it was. And now price is coming back below your value area low. So again, very big support that's currently being lost. And then, you know, basically like reclaiming the value area low could be, you could be looking for a potential, maybe a scalp trade or something like that. If, you know, if price was to kind of like do this, reclaim value area low, there's your entry. You know, your invalidation is simply just price kind of working its way back outside, getting acceptance outside of below value area low again. But you see this, your first target would be up to your point of control, reclaim that, value area high. So that's how I would look to trade that. Very simple, very straightforward. Obviously, again, confluence would be nice if there's something else lining up in this region. I'm not going to do that because it's kind of outside the scope of this video. That'll be in later tutorials. But yeah, so macro value area high, that's how you get, or macro value areas, how you get those levels. And then even this sub range within the overall, you know, bigger picture here. So anyway, hope this helps. And we got plenty more to go in this module. Hope you enjoyed the video. Trade safe out there. We'll see you on the next one.